Hey everyone, welcome back to your ASX Market Watch. Thank you so much for joining me today, guys. It's really great to have you checking out the entire world from a Chartist's point of view. A great way to spend a couple of minutes on your weekend just to see how the week in investing turned out and see exactly what's going on, because we believe, of course, that 3 out of 4 stocks might follow the overall market, and to determine which way the overall market is heading, we look at the indices around the world. We look at the All Ordinaries down under, we look at the Dow Jones in Americas, we look at the FTSE in Europe, and we look at the Shanghai Composite in China as well. A great idea to look at China. Everyone is really checking China at the moment. It's like it used to be if America sneezes, then the world gets a cold. But now at the moment, seriously, guys, if China sneezes, then the world gets basically the influenza. They get something really crazy. Everyone is watching China at the moment, and so we will too, because it pays to be on the front of the trends. And on that note, guys, where will we start? Well, let's start down under Australia. It's a great country. I love Australia. It's absolutely fantastic, and it's good to look at the charts as well. Now, really quickly, guys, I tell you this every week, it is not rocket science. It's so ridiculously basic. What have we got here? This blue line up here. It's and I might even just enlarge it a little bit so we get a really big picture. Beautiful, look at that. So this blue line is the previous high. It's the highest point we've had over the last 2 years on the All Ordinaries down under. And that's pretty much almost exactly where the market did find resistance. I was expecting it to find resistance, and I've been saying that for the last 2 weeks. And so you guys will be well ahead of that if you've been following ASX Market Watch. Again, not rocket science. In fact, I expressly said that the market would find just a bit of consolidation. See how we've got this uptrend line, and the market will actually find support at that uptrend line, but then it will also find resistance at that 5,000 level mark, which it has done. There we are up to today's date, and I'll just increase that a little bit because what has happened here, guys? We've got resistance at the 5,000 level, and then just on Friday we've got dead on support at 4,900. The market's bounced off and headed upwards. And where was that level? We've got 1, 2. This is the third time it's touched that trend line. So this is the trend line support, and this is what we're seeing now, is that consolidation in that area that I spoke about 2 weeks ago. So again, really ridiculously simple stuff, not rocket science at all. And if we're like, what I'm hoping for, just personally, is for this to actually turn into a bullish continuation pattern, which will see a bit of consolidation and then a breakout to the upside. Of course, that will be determined by earnings and possibly by cash flow, into the country and out of the country, and all sorts of things. Basically, that's why we look at the charts, just to simplify the entire world. If it does break out of that area, let's have a look and see exactly what we might expect, because there could be good things, and we could potentially expect 100% extension, which would bring us to around the 5,200 level, which we've been sort of professing for a while, guys. A lot of other Elliott Wave users out there have been professing 5,200 as well, or approximately. So that's a target based on the Elliott Wave method. And again, what I would expect is a bit of consolidation before that happens, and for a little spring to happen, a little coiling spring, and when it moves on, it will just sort of spout upwards, which will be fantastic. But that's the All Ordinaries. So again, really simple stuff. The Dow Jones again, guys, again, very, very, very simple stuff. And this, who got a little bit frightened over the week? Come on, you can admit it, guys. We got, nice big falls. Obviously, people who are trading short term would be probably out of the market. But then, exactly what happened? Where did we find support? Well, I'll let you guess that one. It's not too hard to guess. It is the long-term trend line. Actually, it's not even the long-term trend line. It's sort of a short-term trend line, and the market has pretty much bounced off exactly that level. I think today, after today on the Dow, it's around 12,130 roundabouts, so it has sort of found support at that level. Guys, what we're looking out for on the Dow Jones, just quickly, if it does make a lower move down and close below around the 11,800 level, that'll be a short-term exit signal on the Dow Jones. But in the meantime, it still finds support at that level. Obviously, there's still buyers out there to support the move. So the target, the long-term target on the Dow still stands, as we were talking about last week, and that was 13,300 approximately. Now, that's a long target, guys. That's a really, really long target. But basically, we've based that on the higher end of the Elliott Wave targets and on the trend line here as well. because the trend line is sort of giving us a nice curvature. Now, if that continues, I mean, that will be quite amazing. So I'm not expecting that, 100%. Still looking out for that exit signal anytime, but you just got to keep on the ball, basically. In the meantime, we've still got that support at that trend line. So really, really simple stuff. The FTSE is a different story. And again, like, you may have gotten shaken out during the week just because it was a little bit scary. Obviously, China was starting to have a few jitters, and that sort of caused the world to have a little mini panic. But again, guys, what happened? Well, we've gone through the short-term trend line here as well, but where did we find support? At the previous high. So again, there's a lot of support around, guys, and that's the reason why I'd be hesitant to short sell at the moment. Really, a lot of these dips are potential buying opportunities if you were to believe that this support will hold, and that's pretty much what's happened at the moment. So still around the 6,000 level, still looking at around 6,300 on the FTSE for a longer term Elliott Wave target at the moment. And again, in the meantime, if we were to have another close below that 5,814 level on the FTSE, that would be a short-term exit signal for the FTSE. The only other thing that I really want to talk to you about on the FTSE is this potential broadening wedge pattern. And we all know, if you've been watching ASX Market Watch for any period of time, I'll just get rid of this other stuff here as well. If you've been watching ASX Market Watch for any period of time, you'll know what a broadening wedge will do or can do. Basically what it means is we see a lot of volatility at market tops. It's when people are selling into the rallies and then buying into the dips, and different people are sort of banking on a different outcome. The highest probability outcome for a broadening wedge, if it does occur, or if it does get confirmed, would be a sharp drop through the bottom of the wedge and then a sharp reaction back to the upside, followed by a bear market. At least that is what has happened probably 3 or 4 times over history in the last 20 years, on long-term and short-term bases, or whatever you would like to say. But that's your sort of broadening wedge. Again, very simple stuff. It's just based on the history, on what actually happens in price and the reasons behind that price fluctuation there as well. So that's the FTSE there at the moment. Last but not least is China, of course. And again, guys, I mean, you may have been a little bit frightened during the week, but that's the whole reason. If you have a solid trading plan and you can follow that plan, and this is just my personal plan, you might have a different one, and if it works for you, then that is beautiful. That's the poetry. That's the beautiful stuff in the markets. That's what really gives you the goods. What we had was a short-term buy signal on the Shanghai Composite. That is still standing because we've had a lower trough, but we need a lower peak and then for a little zigzag pattern down to confirm a short-term exit signal. Guys, just as a caveat here, there's medium-term resistance. See this beautiful big trend line, medium-term basis. It's about a year and a half old, that trend line, fairly powerful. It will actually provide resistance in the future for you, but in the meantime, we still have that short-term entry. So there's a few opposing market forces there, and we'll see which one wins out. But yeah, basically, to put it simply, it's in a short-term uptrend. So that is the world, guys. Thank you so much for joining me, and I hope it wasn't too complicated. Hope it wasn't too simple as well. Just basically destined to give you the goods, like just give you the stuff that works, at least that works for me, and that's what I'm here for. But again, it's great to check out the markets with you. I cannot wait to share more stuff with you next week, especially as we see if that support holds or not. Until then, guys, happy trending, and I'll see you then. Bye for now.